everyone, it's Gail with Traders Help Desk, and I wanted to show you two trades that I lost money on. And it's not because of the market, it was because I jumped in too soon. And the first one was a spread, and I lost $24 on it with 3 contracts. And then the other one, I had about $20 of risk per contract, so that was about 60 bucks. But I just entered too soon. It's really that simple. It was my mistake. And I am going to enter another one because now I have my setup. This is where I entered before and noticed that it wasn't at the ATR. The stochastics had not formed the little dip that I needed. And now we do have the volume divergence. So now I'm actually going to enter, and I'm going to pause the screen and then I'll come. Okay, as you can see, I have re-entered, and it's for the same strike price that I had, but I actually have the setup. So much different from previously. And I want to try the spread, so I'm going to enter one spread as well. Okay, so you can see now I've entered both the binary and the spread. And I've got $18 of risk per contract on the binary. And I have $8 per contract on the spread. So we're going to see what happens. I do think this one will work out in my favor. The other one I just entered early. And, you know, this is an issue that all traders face. They get excited, you know, that they're getting a potential setup and they enter early. And that's what I did. You know, this one does have better potential because, I don't want that one, I want this one. Because from the dots, you can see that we've had hidden divergence. So this is the indication that it's going to go down. Now, why do I think it's going to go down? Well, number one, and this is what got me so excited, we actually had volume divergence, but we also have an ADX that is at 73, and the stochastics is overextended. So the combination of that actually indicated that it would go down. And this is the 240-minute chart. Let me shrink it down so you can see it. And you can see that the stochastics is very overextended. And I'm expecting this to come down to this ATR. Now, with that expectation, you could also do some additional binaries. For example, I could go out on the Euro Yen to 9 a.m. I could also do an 11 a.m. I could also do a 3 p.m. because this will probably be the move for the entire day. So all you would have to do is, for example, the 11 a.m., you know, what are the prices? Well, if it comes down to 133.40 by 11 o'clock, you know, that's about $17 of risk on that. You could look at the 3 p.m. Again, you know, targeting the 133.40 area. That's about $25 of risk. You could even do, you know, an additional spread. This one would be more expensive. It would be just about $20 a contract. You could also do the daily. You know, that's a little bit more conducive. But it's going to have to move at least about 40 pips just to get in your favor. So I wouldn't want that one. Let's go to the 7 to 3. You know, this one has got almost $40 of, no, about $32 of risk on it. So, you know, I think I've got the better risk associated with this. You know, again, you've got multiple setups that you could use You could even go out to a 7 to 9 and see what it is. You would have to come down to about 57. But of course, you've got almost 2 hours for that to occur as well. And I don't think it would get to 47. So we're just going to sit here and watch these and see if they work out. Remember, I've already had 2 losses, not because the setups didn't work. I just entered early. And that's a trader's fault, and that's something that you really have to kind of keep up with, because jumping in too early can cost you money. It did me. I did go ahead and set a target on this, and it is at 15. So I'm going to pause the screen and just wait and see what happens. Okay, as you can see, it just surged downward and gave me my profit target on the binary. I'm still holding on the spread. And I think I'm going to go ahead and take profits early because it is right at the ATR. Well, I waited too long. Let's see if it comes back down. The great thing about the spreads is your risk and your profit is actually based on the indicative index at expiration. So I'm going to wait a few minutes and see if this doesn't come back down. That was probably some profit taken there, but I'm eyeing the 60-minute because it's right at the ATR. And I really need it to break through this ATR. Maybe form a congestion dot down here around 25. It would be really nice. But again, I'm holding to see if it does that. Okay, this is really what I wanted to see. That congestion dot forming at 133.11. There's just about 30 minutes left in this. I want to see if it comes on down to the congestion dot. You can see, it's kind of flirting with this ATR, which is what I don't like. Now, this is the other thing I'm looking at. I'm comparing the two, the 60-minute with the 15-minute, and really, this should come down to about here before it starts retracing. Anything can happen, though. Okay, what I'm looking at is this bar has not made a new low. It looks like it has over here, and this is a 15-minute chart as well, okay? But, and you can see it's 15-minute right here. But when you're actually looking at the underlying, that new low has not come in. And I'm going to give it a few more minutes and see if it pops down. I don't like that this is an inside bar because it actually indicates a pause in the market. And I don't want the market to pause right now. I only have 15 minutes left on my spread. So I'm going to go ahead and exit this trade. I don't like that it did not make a new low on the underlying. So it really goes to show, even though you made a mistake, I had 2 trades that lost money because I was not patient and I did not wait for my entry. But I came back with the proper entry and actually was able to recoup those losses and make money for the day. And this is critical to all traders. Whether you're new or experienced, we all make mistakes. So this is just showing you how you can recuperate from that mistake.